Hi, welcome to Numerix Video Blog. I'm your host, Jim Jockle. With the recent announcement of the devaluation of the yuan, we've seen U.S. equities down 1%. We've seen a rebound of crude oil coming off 6 years lows. And now the question is on the precipice of a currency war. Joining us today for this discussion is FX strategist from Numerix, Udi Sella. Udi, how are you, sir?
Excellent. Good morning, Jim.
Good morning. All right. Why don't we just give a quick recap? What is going on in China?
So basically what happened is over the last year or even more, the Chinese economy is slowing down, and we're not seeing a growth rate of GDP of over 7%. Recently we've seen a slump in the Chinese exchanges, and basically several measures were taken in order to support. With that being said, the exchange was up about 150% and went down about 30%. Still, it created havoc, and the government wanted to react. And we see also a slowdown in construction, slowdown in consumption, etc. So basically, what the Chinese financial authorities are trying to achieve is basically to restart the economy and give it some a competitive edge. And they've taken yesterday a very, very dramatic measure, which is basically almost free-floating the currency pair. And interesting, the yuan is weakened, almost 4%. Why am I saying almost free float? Because every day it's allowed to move by 2%. 2% from the closing of the previous day.
Well, let's talk about the impact on the markets. Specifically, obviously we're all watching the equity markets right now, the news of Alibaba's buyback. But let's talk about the pairs. What is going on in the near term in reaction to the devaluation?
Yeah, so that's actually a very interesting question, because again, we see how correlated the different markets are. So if we start with the foreign exchange market, we've already mentioned the weakening of the yuan versus the dollar. But the thing is that all the other Asian currencies need to devalue in order to retain the competitive advantage versus the Chinese. So for instance, Japan is the largest exporter into China. So they basically announced that they will go with any amount with the quantitative easing to continue weakening the Japanese yen. The Indonesian rupee is getting hammered. The Vietnamese dong is weakening a lot. Then we're looking at markets like Brazil, Russia, etc. All the weak emerging economies are weakening more and more. Interestingly, the euro has strengthened a bit, and obviously the dollar. So this is just the FX market. Commodities in general are weakening further, because the fear is that the Chinese will have dollars to buy commodities like steel, like nickel, copper, all those that they have created the huge demand over the years. Interestingly, the only commodity which actually is strengthening is pork bellies due to the demand in China. And then the third market where we see impact is the equities market, especially with luxuries such as LVMH and so Louis Vuitton, or BMW in Germany. The stocks have weakened a lot. And the last market that we see impact is really the hybrids, where again spreads are opening against the benchmark govies. And again we've seen the 10-year Treasury strengthen, or if you like, the yield coming lower, and same with the German bonds. So everything is interrelated.
It's interesting that you mentioned the autos. U.S. reports today upticks in auto loans and new car sales. So it's interesting to see how that's going to play out. And specifically, that was as related to the sustained low rate environment here in the U.S. But let's turn to that question now. How is this going to change and impact in the near term the Fed's decision to raise rates here in the U.S.?
So when we look at it's a great question. So when we look at the set of criteria that the Fed applies. So one thing is really, unemployment in the U.S., and we see that we're hitting the levels where this is considered as advanced and doesn't incite anymore. The other criteria is really inflation. So we don't see, unfortunately, perhaps for us, inflationary pressures in the U.S., to raise salaries, etc. And The problem with this, if you like, with these currency wars or these devaluations of currencies against the dollar, basically it means that this is going to hamper the U.S. Exports. And as a result, you will see basically the U.S. is importing deflationary pressures. So this is actually supposed to perhaps to have the Fed less, a bit more, let's put this way, reluctant to raise rates, because this raising rates will just raise, will strengthen further the U.S. dollar, and as a result, the inflationary pressures will even diminish further. So I'll price about 40% rate hike in September. Personally, I think they may push it to December.
So, final question for you, Udi. In any market event, there's winners and losers. Who are the winners?
Well, I know just as an anecdotal fact is that there were a lot of one-touch options in the market, struck around 6:30, because when this decision was taken, the yuan was trading like 6.11 to the US dollar, and there was a lot of digital risk around 6:30, and now the buyers of those options were doing very well. People that were saying also that the stock market has reached a peak. So if you look at, I personally looked yesterday at stocks like MVH, and it nearly doubled over the last 5 years. So maybe so some people, some funds were starting to short those luxury stocks, so they were making probably good, a nice skill there. And also the last thing is people that were betting, that the 10-year notes were going the yields were going too high, and there will be a correction. I think these are like the three markets.
So give me your watch list for the next few weeks. What are you going to be looking at?
I'm going to be looking at probably the dollar yen, dollar yuan, and the dollar Russia. These are the ones I'm going to look at. The 10-year U.S. and Germany. I'm going to look at gold, because interestingly, gold a little bit recovered. It was trading below $1,100 for an ounce, and now it's above. These are like the main markets I'll be looking at, and the goods, of course. They're like LVMH, BMW, and so forth.
Well, Udi, I want to thank you so much for your time and your insight. Obviously, if this turns into a currency war, we're going to want to have you back and get your insights as things continue to evolve in the markets over the next couple of weeks. I appreciate your time. And of course, we want to talk about the trends that you want to talk about. Please follow us on LinkedIn or on Twitter @NX Analytics. Thank you very much. I'm Jim Jockle.